Moving on, like promised, remember Kirloskar Oil Engines recently bagged a Defence Ministry order for 270 crore on April 2nd. The company is set to design and develop in-house speed engines scalable from 3 megawatt to 10 megawatts. To discuss this, we are joined by Gauri Kirloskar, MD of Kirloskar Oil Engines. Thank you so much, Gauri, for joining us. First up, take us through the contours of this particular order win, the total timelines, what exactly you will be delivering, and is this the start of further order wins? Is this just a prototype that you're developing for the defense services at this point of time?
Yeah, thank you very much. Thanks for having me on the show. It's a very exciting order for us. And at this point of time, it is an order for a prototype development. But if we develop this order and this engine and deliver this engine successfully, then it opens up further opportunities with the Indian Navy to develop engines for future projects as well.
What is the exact scope of work that you are doing for the Navy? We typically understand that you are in the genset business. So we understand that this particular development is a slight shift away from what essentially Kirloskar Oil Engine developed. And along with that, what is the kind of experience that you have in this particular segment?
Great question. So yeah, this project is to develop a 6 megawatt engine, and that's for marine main propulsion of Navy ships. And this is where the project is really exciting for us, because it's also a great initiative from the government to encourage R&D in India. Historically, our R&D spend as a country is significantly lower in comparison to most developed countries. And the government has been focusing on increasing that spend. And of course, industry has a role to play in that. And we at KOEL are very proud to say that we have developed our entire engine portfolio in-house, and the focus on R&D has always been there in the DNA of the organization since inception. So through this project, we will be not only responsible for just manufacturing the engine, but also designing and developing it in India, which means we will own the technology rights of the engine as a country, and that is extremely significant. When you talked about, what is our experience in developing these sorts of engines, I do want to say that this is not the first time that we are executing projects at this scale. We have in the past also executed projects as large as this. In fact, more than 250 of these kinds and size of engines have been installed in various applications in India as we speak by us. And what is different in those projects against this one, though, is that in the earlier case, we had a technology collaboration with another engine company and then executed the manufacturing in India, right? But that means that the intellectual property and the technology didn't belong to us. In this current project, we will develop the technology in-house and we will hold the rights to the technology. So for us as an organization, and also from the nation's priority of indigenization of technology, this is a very significant step forward.
Gauri, hi, morning. This is Reema here. Can we talk about exports? Sorry, I think exports is about 10% of your revenues. Is that correct?
Yes, that's right.
Broadly. And you would export to US and Middle East? Those are the key markets?
Those are some of the key markets. Yes, there are other markets as well, but yeah, those are some of the key markets.
Okay. And now, given all the uncertainty and what's happening with tariffs, etc., how do you expect exports to pan out? Are the orders which you had on hand, are they continuing as of now? What could export growth look like, say, for the next 2 quarters given this, or is there some pause?
So from the specific US point of view, US is strategically a very important market for us. We made some small investments there and we're looking at growing that business over the longer term. But today, since the revenue from the US part of the business is not very significant for us, I don't see a significant impact because of what's going on from the US. If you also look at the supply chain and how it would impact us as an organization, I'd say that because we develop technology in-house and we therefore are also in a unique position to make sure that our supply chains are largely localized, that's a competitive advantage for us. Like even in CPCB4+, where we saw a lot of the parts becoming proprietary, our import content is still under 10%, and within that 10%, the dependence on the US is still quite marginal. So I don't see a major impact from that point at this stage. Obviously, the situation is clearly very dynamic and uncertain at this stage. We haven't seen any significant impact to demand at this point of time, but we will have to obviously wait and watch and see where the situation ends up and what impact it will have, not only from the India-US point of view, but from the global point of view.
Gauri, let's also talk about the core business itself, which is, the diesel genset business. We understand with the latest emission norms, all of the players have had to have gone ahead and upgraded their offerings to the market, which are significantly expensive compared to, the earlier norms. So, number one, what has been the market response to these latest diesel gensets? A few analysts have also raised concerns in terms of market share. We understand that the competition on ground has been much more intense. And last couple of quarters, you enjoyed some pre-buying. So, going forward, what can be the steady state growth you can see in the CPCB4 norms?
Sure, yeah. So, post the CPCB4 plus transition, as we expected, there was a general contraction in the market. And that's because of the pre-buy effect. And we saw that play out for a couple of quarters. But other than the pre-buy related demand changes, we don't at this moment, see any major changes in the market across the segments. And the demand looks as we expected in terms of the pickup. Quarter by quarter, it looks as we expected. The reason I'm being cautious in answering you is that given the general uncertainty due to President Trump's tariff announcements, we will be keeping an eye out for any changes in demand that we see. But so far, at least the domestic scenario seems okay. From a market share point of view, our market shares have remained stable through this transition. There has been some consolidation in the industry. So there have been market share movements of other players, but overall, our market shares have remained the same. When it comes to, I believe your other question was on pricing. On pricing, there has been the price increase post the CPCB4 plus transition across the industry. And I would say that the market is still in the process of settling down on that. So the price discovery process will play out, and it will play out across sort of like a node by node level across the product range. But overall, it looks like the market has accepted the price uptick. It was, something that was expected and was talked about, obviously before the change, and the CPCB4 plus change itself had been delayed for a year. So it was, something that was in the works. And we are not really seeing a huge change in demand, as I talked about before. What we are focusing on, though, as an organization is, a large part of the smaller nodes in the market under CPCB4 plus are commoditized. And there has also been huge technology convergence with this emission norm change. And what I mean by that is that engine manufacturers are largely using the same technology to achieve emission requirements. So as an organization, we have been focused on creating a differentiated product range. It's called OptiPrime. And because of this differentiation, we can maybe have some pricing power.
Gauri, one last question, request you to keep your answer a little short. In terms of data centers, what has been the demand over there? We understand that there has been significant inquiries that have come in from that particular segment. What has been the growth that we're seeing over there? And overall, what can be a sort of steady state growth we can see? FY25, there has been a bit of a dip as far as operational performance is concerned.
Sure. So the data center market is, and that segment is the fastest growing segment for our industry in power gen. So if you look at, say, high horsepower growth in Q3, okay, I can talk about Q3 numbers. The industry in that segment actually grew at 22%. Whereas if we look at below CPCB4, it contracted largely to around 40% degrowth. So that's the largest growing segment, and it's largely driven by data center demand. So this is something that we expect to continue, and it is something that we now have products ready for, and we've started catering to data centers already. We have the certifications, and it is something that we're very focused on.
Thank you very much, Gauri, for joining in. Look forward to more conversations. We need to get into a break. On the other side, market technicals with Soni Patnaik.